Hi, everybody. Thanks for joining us this afternoon. I know it's a busy part of the middle part of the week, but hopefully you are getting a lot of good information from what I've seen. I'm thoroughly impressed, and I'm more than happy to add my 2 cents in to the value we're bringing you this afternoon. Again, this is part of my ValueCharts webinar series, specifically titled Everyday Profits. It's kind of an interesting idea. It's what kind of what are we talking about? And basically, what I'm talking about this afternoon is the way I trade with some proprietary trades and timing systems throughout the trading day. That I walk into the market with the sole purpose of walking away from the market sometime that day with profitable trades in my pocket. In this particular context, our sole aim is to generate income. So let's go ahead and get to it. That way you can see exactly what I'm talking about. All right, for those of you that have never done a webinar with me, feel free to go ahead and submit the questions at any time as they kind of pop into your head. If I see your question and I know I'm going to answer it shortly, I won't immediately answer it then. I will try to answer it as we go and maybe at the end in case I don't catch it right off the bat. But other than that, feel free to go ahead and ask the questions as they come up. Okay, this is our quick risk disclaimer. I'm not going to read it verbatim for you, but just for you to understand that trading or investing always carries a high level of risk. You should know your investment objectives, ability to tolerate risk, and your experience as a trader. This information is provided by ValueCharts without any guarantee of its accuracy or liability of loss or damage of any results that may come directly or indirectly from the content. Now, a lot of this information is shown for example only and has many inherent limitations. Now, again, we're not representing that this account or any account will likely to achieve profits or losses those shown. And most importantly, past performance is not necessarily indicative of future results. All right, one more quick disclaimer, CFTC Rule 4.41, U.S. government and the CFTC wants you again to know that there are large potential rewards and risk associated with trading in the futures and options market. This is not a solicitation to buy or sell future stocks or options on the same. Again, any past performance of any trading system or methodology is not necessarily indicative of future results. Okay, so again, a little bit, Dan gave me a really good introduction, so I'm going to kind of gloss over this. I graduated from Vanderbilt University in 1995, so it gives you an idea about how old I am. The year after, I was a full broker with Merrill Lynch, handling a lot on the stocks and options side of things. At that time, you know, remember full service brokers, the 2-3% commissions on trades? Not anymore. So after that, I joined the Vanguard Group and then quickly migrated to the asset management service. More specifically, as a senior advisor, I was tasked with handling the appreciated stock portfolios of high net worth clients. With that, we managed the tax loss harvesting as well as the creation of income off of those appreciated stocks, and primarily I used option strategies. So a lot of this information that I'm going to present to you I've gleaned from all those years at Vanguard and then all that time since in my own trading room. This is a little outdated, actually almost 24 months now in the stocks and options live trading room. We trade the markets every day that they're open, and so we've had a lot of great experience in that trading room and a lot of fun too. All right, so let's get down to the specifics of the Everyday Profits webinar here. Some quick questions that I kind of want to touch on. Why should we trade intraday? What benefits do we gain as a trader from taking action in the markets every day? This question up here is probably one of the biggest questions that you get. How much money can I make in a day? Okay, I'm going to talk about the potential and what kind of numbers you can expect. Okay, so maybe it's a good idea to trade intraday. Let me give it a shot. What are the rules for great intraday trades? And what kind of proof do you have? What kind of experiences have you had in trading these strategies? Can you show me? So I'll touch on that. What trade setups do we work through in the options, in the trading room, in the Everyday Profits workshop? How frequently do they work? Another point is, I'd like to bring this up. It's called Trade the Magic Box. What is he talking about? Trade the Magic Box and you'll be profitable. That's an interesting subject I'd like to bring in. And then more specifics about trading intraday. Trade the morning reversals and you'll make money just by watching the clock. That's a very fascinating occurrence that happens every single day in the markets. And I'll show you proof of these types of trades and how we use those to generate that income every day. Some other tips on trading intraday is, how do you gauge the strength of the various markets? How do you know what that means to your trading? Are the markets moving together, or is one market moving stronger than another? They make a difference and they can influence each other, so it's good to know the differences, if there is some, in the various markets. And then how do we gauge the market's mood? Okay, is it in an easygoing, good manner today? Is it a seesaw kind of day that it's easy to make money within a average true range kind of movement in the markets of the individual stocks? Or is it a kind of a breakout trend sort of day? How would you know the difference, and how is it different to trade them? You can trade them both, and you can make money in both kind of markets, and I'll show you proof of that. Okay, so I want to start out the rest of the presentation with a really quick exercise. Okay, this is, you've been listening to some speakers already. I want you to do something actively for me. Okay, a simple question that everybody wants to ask you, right? How much money do you make? Okay, how much money do you make? Specifically, I actually want to ask, how much money do you make every single day? Right? Basically, this is how we start. What is your monthly take-home income, or based on your salary? What is your monthly income? Take that number, divide it by 22. Okay? Whatever it is, take a quick calculation. Your monthly income divided by 22. That number is a good approximation of your daily income. Every day you go to work, this is what you bring home. We used to call that bring home the bacon, right? I don't think they use the term anymore. But you bring home the bacon. What is your daily number? Okay? Here's a quick example of the math. If you make $30,000 a year, that roughly comes out to $2,500 a month. Okay? $2,500 a month divided by 22, and your daily income is roughly $114 a day. You wish it was more, don't you? Whatever your number is, you look at it and you think, that's it? The whole day? But I'm going to show you ways you can actually increase that. So take your calculation. You don't have to type it in right now. Put it on the side. But thank you, Vijay. I see we had one eager trader went ahead and did that for me. I appreciate that. Thank you. Why, you know. All right. So that daily income. I want to ask you a couple quick questions. What would it be worth it to you to boost that by, say, $50 a day? How about an additional $100 a day? What kind of numbers? What would it be worth it to you to do that? All right? All right, so let's go ahead and get into the specifics of the Everyday Profits program, okay? Again, why should we trade intraday, and what benefits does it give the trader? Okay? One thing that's very interesting, and being in the markets every day that they're open for 2 years, we're talking almost 500 days of trading, okay? One thing you quickly realize is that every day is different. Every day is different. It can feel like any other Monday or every other Friday, but every single day is different. It's one thing that's unique about the markets is it's easy to adapt to a changing environment. You can be bullish, you can be bearish, but intraday, you come to the markets fresh. The day might seem similar to the previous day, but it becomes something that you can adapt to if you start to feel that the market environment is changing. Okay? One other benefit for everyday profits or intraday trading is that when you leave and you shut down your computer at the end of the day, you know what the bottom line is. You know what your daily profits are. You walk away every day, hopefully, with more money in your pockets than when you started. That's our ultimate goal. We are not investing. We are not looking out 20 years and looking where our portfolio is going to be. Our purpose for intraday trading is to boost our income that day. Okay? And then one thing that I like is I like to sleep well at night. I like the fact that in the portfolio, in the account that I trade intraday, I have no overnight exposure risk. I don't have to worry about what happens overseas while I'm sleeping. I don't have to worry about what an analyst may say, good or bad, about a particular stock that I hold. So there is no overnight exposure risk. All right, next question. How much money can you make in a day? Now, this number is kind of variable, okay? Again, because every day is different, but each trading day is similar. We can make money every day by watching how the trading day unfolds and following similar patterns from the previous day. Okay, there is an active morning period. And within that active morning period, there are different kinds of trades. Excuse me. There are consistent range-bound trades, and then we also have potential breakout moves from that opening range. Okay, here is an example. This is of the NASDAQ QQQ ETF, and you see we start the day down here, and we come down, we make a low, bounce higher, moving. These are all intraday bars. Then we kind of consolidate, and at the end of the opening period, right here, we break out the top, and then this low down here creates the bottom of the opening range. And what happens is we have this nice move for the next 5 minutes or so higher, and then we get a subsequent fall back into the opening range zone, back into this area. And if we take that trade as it's falling right here, this is what we're looking for. We take that trade way back into the opening range, and we can take a profitable move. Now, right here, I'm showing you a chart of the NASDAQ QQQs, but this is falling. I can buy puts on the QQQs, or I can trade an individual stock that happens to be moving in that same direction. Here's an example. I actually trade two. This is Netflix, and we traded the 450 puts, made roughly $2,500. Okay. Here is Priceline, the 1030 puts, right there on that same move, roughly make $2,270. So between the two, a little bit more than $4,700 with that one small move. Now, of course, I'm trading multiple contracts. It's not just one contract. But again, because of the containment of how I'm trading and based on my experience, I'm trading roughly 15 to 20 contracts on that move. Okay, I can trade less. I have some traders that trade 2 or 3, but that move in and of itself is just a scalable number. The move itself is the trade. Okay, however many contracts you trade is based on your account size and your familiarity with the trading system. Okay, again, consistent range-bound type trades like I just showed you, or potential breakout moves are another kind of trades. And then after the morning period, you have lunchtime, and then we have what we call a springboard afternoon period. Okay, now in that afternoon period, what we can do is, if the index has made a breakout kind of move during the day, move consistently higher or lower, it can actually retrace back towards where the opening range move. And basically, after this after this webinar, take a look at the NASDAQ, take a look at the S&P. This is what we call a breakout move retracement. Or the afternoon can be a situation in which the morning move continues and keeps running in that same direction. You can get those telltale signs based on how the stock is moving around both the support and resistance levels created by the opening range, as well as the time period at which these potential moves start. Okay, here's an example. Here's the opening range this morning. Not this morning, but one previous morning. We have a breakout move to the upside. We get this massive range through the lunch period of consolidation. And what do we have? At roughly after the lunchtime doldrums, we have this breakout continuation move higher. Here, move higher, consolidation, move higher. What's neat was this was a Friday. It wasn't last Friday, the Friday before last. And what do we have? This is called a snapback trade. Okay, right in the last 15 to 20 minutes, we have a really quick snapback trade here in the Nasdaq. S&P did the same thing, but that is how the day unfolded, and these are the types of moves we see on a daily basis. This move higher right here towards the end of the day, we traded that here, Tesla, the 210 calls, and right there we are roughly on 15 contracts made about $120 a contract for that move. Okay, and you can see I do use options. I do stocks and options in my trading room. I appreciate and respect the power of leverage options gives me when I'm trading. On an intraday basis, individual stocks and individual indexes will only move a finite amount. In order to enhance your profitability, you need to be able to use leverage as well as increase the number of positions you have, how many contracts you use. And if you do both, you're going to magnify your eventual returns that you get in your overall trading. Okay, so again, are there any more rules that we should follow for great intraday trades? Okay, know that each trading day has two distinct halves, like a basketball game. You have the morning session, then you have the lunchtime halftime, and then you have the afternoon session. Okay, beware of that lunchtime halftime lull. A lot of traders are not very active during that lunchtime range. They're waiting. They're either evaluating the performance of the morning session, looking forward to the afternoon session, and seeing if they are more likely to be trading a retracement back into the opening range zone or continuing the morning move. Those are both potential trades, and that's what they're doing during lunchtime. And then when the market picks up in the afternoon, then they continue. Okay, another tip for great intraday trades: follow the index signals for greater success. It's true that a stock can be strong on its own or weak on its own, but the majority of the time when a stock is behaving normally, it usually follows the signals of the index that it's based on. Okay, watch the index's performance. How strong is it moving compared to the previous day or the other indexes? Okay, check its momentum. Are we quite bullish or bearish, or are we kind of middle of the road both? If it's that case, then we can take advantage of that. When we are watching an index, we want to match that index to the stocks we're actively trading. If we are actively trading General Motors, we're really not going to be staring at the NASDAQ 100 or the Russell 2000. It's a different index. What we want to pay attention to is either the Dow 30 or the S&P 500. Match the index to the stocks that you're trading. Okay, what trade setups work? How frequently do they work? Okay, the types of setups that we take are based on the type of trading we're doing. Remember, I said a seesaw back and forth type trading action. If this is the opening range high and this is the opening range low, and the majority of the trades are going back and forth, sometimes a little bit above, sometimes back to the middle, back down here. Okay, you see how it's back and forth basically between the range. Okay, range-bound trading is fine as long as you know that's what we're doing. We're looking for reversals at each of those points. A reversal here, there, here, there, here, there. Okay, you're looking for reversal type trades. Excuse me. You're looking for single tops or single bottoms, double tops, double bottoms. We call these also looking specifically for divergences, bullish and bearish at those turns. We're looking for head and shoulders patterns and inverse head and shoulders patterns. If you want to see a beautiful head and shoulders pattern today, look at Netflix roughly about 11 a.m. today. You see that on about a 1 to 2 minute chart. You'll see a very nice head and shoulders pattern that brought the Netflix back into the middle of the opening range. That head and shoulders pattern was beautiful. Okay, what I'm saying about range-bound type trading, here's some movement, price movement during the opening range. Okay, so we're watching it. It looks pretty steady. It's going back and forth, and we come out here and we come back down where? To the bottom support level of the opening range. You make a low right here, you bounce a little higher, you come back down, make another low right here. Okay, come back down, test the low of the opening range again, and then we start to move higher. What is this? Here's opening range, low, providing support. You have an inverse head and shoulders pattern right there, and we move higher. This trade is easily tradable from this low to this high in either the index or individual stocks that are following along with its index. And that particular trade to the upside, you can see price line, the 1025 calls, trading roughly 15 contracts, make about $150 a contract on that one move higher right here. That is a very self-contained, easily seen, range-bound reversal and move higher. So roughly $5,000 that we made here trading price line. Okay, now let me see if there's a couple questions here. Momentum indicators, yeah, we have proprietary momentum indicators, but we have traders that use MACD also. A single lot on an option, one option, a directional call or put that I trade roughly is anywhere from $800 to $1,000 a contract, sometimes $1,200. You know, but we're looking to make anywhere from 10 to 15, sometimes 20% on that move. All right, so let's talk about breakout trading. Okay, breakout trading is when we are looking for very strong momentum breakouts. If we are bullish, we are looking for a break higher through resistance. Remember, this is the opening range. We're looking for a break higher like this, or a move higher, a retest, and then a continuation move. Same thing to the downside, either a direct break and a fall, or a break lower, a retest, and then a continuation move to the downside. Okay, if we're bullish, we're looking for a break higher. If we're bearish, we're looking through a break lower through support, like I showed you. Continuation move higher, just like that. Here's an example. The S&P gapped up at the open, moved lower, back to the middle, lower, and here after the low of the opening range, we just basically continue more to the downside. You can see the momentum picture is very strong right down here. It continues lower. Okay. I don't always use the 1 minute, Dan. It just depends. Sometimes I use tick charts, sometimes 2 minute charts. Okay. Now, again, trade the magic box and you'll be profitable. The magic box, no big surprise, is what? The magic box is basically the opening range of the market. Okay? Use that to help you trade. What is the high price level of the opening range? That is naturally resistance until it's broken. Then it becomes support. Okay? the low of the opening range. Initially, that's support. If it's broken to the downside, it becomes resistance. Okay, again, this is the same pattern I showed you earlier. Here it's support, here it's support, here it's support, and the inverse head and shoulders results in a move higher. Okay, the most important thing that I can tell you about trading the magic box is respect those high and low prices throughout the entire day, because multiple times we bounce below and above them. Okay, if you are in between the high and low prices, play range-bound trades between those levels. Okay, if you are above or below those opening range highs and lows, you play breakout trades to the upside and to the downside. I know I'm getting some questions here. How do you define the opening range? Now, usually it's by time, but the thing about it is there are certain days where the opening ranges compress and extend. It just depends on the strength of how the stocks are moving at the opening range at the beginning of the morning period. Now, a part of the Everyday Profits workshop is to identify how to define those opening ranges, how to respect those high and low prices, and when they may actually be extended higher or lower. Okay, and again, I don't have to use the 1-minute chart. So again, here's the opening range. You can see, in addition to this inverse head and shoulder pattern, if you tie that together with the momentum profile, you actually see we're easily playing two double bottoms or two bullish divergences, and that strengthens the move higher. Okay, again, some aspects of trading, we can not only make trades to the upside, but also trades to the downside throughout the day. See here in Google, some people ask me, I said, do you trade with the trend? I said yes, and I also trade against the trend. It depends on the setup and how it moves back and forth with the opening range. Remember, I said if it's contained within the opening range, you can move up and down and up and down. Of course, it's never this easy, but I have traded an opening range in the past in either Google or Netflix, and not only did we get reversals like this once or twice, we've done it 5 or 6 times within the morning. So back and forth, 5 or 6 different trades back and forth, and it was just a unique day. It's not odd to, within a range-bound type of day, to get anywhere from 2 to 3 trades in different stocks, but also same stocks, like we did here with Google, puts and calls. Okay, when the opening range is broken to the downside, again here we break the low of the opening range, we break support, we proceed to the downside with puts. Okay, are there any other secrets here to trading the intraday charts? Now, of course, I've only talked about the morning period. There is the afternoon period on breakouts. So the one thing that I want you to keep in mind is these morning reversals, they happen at normal repeating times during the morning. Now, I can't say it is at 9:47 p.m. Eastern Time. That's when the reversal will happen, but there is a generally accepted range of time, roughly any from 40 to 60 to 80 minutes that these reversals can occur. There are particular signs in which you can be watching for. You can tell if it's going to be a little early or a little bit late. But the majority of the time, it does happen almost by the clock, plus or minus 10 minutes. Now, VJ's asking, most electronic sessions are open 22 hours a day. I trade the exchange time. Do I do credit or debit spreads on these? Yes, you can. You can trade them with individual directional puts and calls. You can trade them with debit spreads or credit spreads. I have people that do credit spreads on a weekly basis, they use what they get from their intraday trading to help time their entries and their exits at the end of the week. If you know which way the markets have a tendency to behave or move higher or lower, you can time your entry on your spreads much better when you're trading them on a swing trading basis. So whereas this program is specifically designed to help you make money every day, that doesn't mean you can't use your knowledge to extend your profits to swing trading or position trading also. Okay. Yes, all this stuff is absolutely taught in detail in the Everyday Profits workshop. Now again, remember the mid-morning reversals and watch the clock. Okay, this is the morning reversals. Early afternoon, look for pullbacks or breakouts. I haven't really touched on the afternoon. The afternoon session provides a lot of opportunities, my traders have found. When you're trading a pullback or a breakout, especially when you're looking to put on credit spreads that will carry over to the next day or the day after, early afternoon is a good time to watch that for a potential pullback or breakout. And then there are what we call end-of-day snapbacks. For the past 2 Fridays in a row, there had been an end-of-day snapback to the downside because in both days the markets were higher going into the close until the very last 30 minutes, and then we had a rapid pullback back to closer to unchanged for the day because most people didn't want to be in the markets. Excuse me. In the markets over the weekend. So that right there presented itself, an end-of-the-day snapback. Okay. Again, this is the morning reversal. I showed you this earlier. Most of the trading has been to the upside. You get this one little push here after the opening period, and then this really nice retracement. If those of you that know Fibonacci, from this high to this low, this is about a 618 retracement. Okay, 618 retracement right here. Easy to track, easy to find, easy to trade. Here's the afternoon snapback. I showed this to you earlier, so I used this chart earlier to show this breakout to the upside in the afternoon, and then a subsequent fall and snapback into the close of the day. Okay. Some other keys to trading everyday profits: gauge the strength of the various markets. Let's see here. All right. 80% of the time, the markets move together. I'm talking about. Let me make sure. I'm talking about the SPY. I'm just talking about the ETFs, but that is the S&P 500 index. And then you have the QQQ. That's the NASDAQ 100. And then you have the IWM. That's the Russell 2000. So right now, this is how it's lined up. Okay? IWM is the weakest of the 3 indices right now. SPY is the second strongest, and I'm talking in terms of bullishness, and the NASDAQ is the strongest. You'll see how the QQQs are breaking higher. The SPY is trying to, but not quite there, and IWM has decreasing or fading upside strength. So the majority of the time they move together, but sometimes one index is stronger than the other. If that index is leading, which is the QQQs, you can look to see if it's possible that the other markets will follow. In this particular case, what I just told you about the current market situation, it's actually my opinion that the SPY and the IWM are correct. The NASDAQ's showing some temporary strength, but I actually feel like the NASDAQ is going to pull back. Why? If you look at your list of your NASDAQ stocks, you see which ones are green and which ones are red. The predominant NASDAQ stock that's moving higher right now is IWM. I'm sorry, is Apple. Is Apple. Now, once Apple runs out of its upside strength, you really don't have you don't have very much else in the NASDAQ 100 leading the markets higher. SPY and IWM are having difficulties moving higher now. The SPY actually on a 240-minute chart looks like a bearish divergence. So take a look at that after the session. Okay. Now again, the next tip, gauge the market's mood. Is it erratic? Is it all over the place? We've had days like this. Okay, you can't trade that. It doesn't make any sense. Now, if it's going back and forth, and you'll be able to see the markets, if they truly are going back and forth, it's relatively easy to trade. Okay, this is the one that you want. This is the one that you don't want. Now, if you're trading, and here's the opening range, if we move higher and break out like this, or move lower and break out like this, that's just fine, as long as the market has direction. If you don't have direction like this, then you can't trade. Do I think crude oil is affecting the price of SPY? I think crude oil was definitely affecting the price of the markets 1 month ago. I don't think it's that case now. Not to the extent that it was before. All right. So let's now I've given you the tips and tricks and shown you how the markets have kind of moved. Let me go back to my original question about bringing home the bacon. Okay. All right. What was your daily income number? I guess that number for 30,000 was what, 114? What would it be worth it to you to boost that number by 50 or additional $100 a day per day? Now that comes out, if you want to do the math, if we're doing $50 a day and we're saying we're winning and getting $50 a day 4 times a week, that comes out to roughly an additional $10,000 a year. If we're talking about winning 4 out of 5 days and we're making $100 a day additional, then we're talking about an increase of roughly $20,000. Now, if you're making $30,000 a year, a $20,000 increase boosts your income by 66%. It's a really good deal. Okay. Now, what would it be worth it to you to learn to boost your income by $20,000 a year? Okay. Think about it. What dollar amount would you pay for a way to boost your income by $100 a day? Okay. Those of you that do the math, $100 a day is basically an additional $1,700 a month. That's roughly it. Maybe a little bit more, but $1,700 a month. What would you do with an additional $1,700 a month? Okay. For this workshop, I mean this presentation for you guys today, I'm offering my Everyday Profits workshop for a discounted price of $297. Okay. Now this is February 26th is when it's going to be held. February 26th at 6 p.m. I apologize for my handwriting. I had the information typed up, but I had the time incorrect. So I want to make sure you see it. Now, where you need to go is www.valuecharts.com/profits. I'm going to put it in the chat box so you guys can all see it. Theo, he says, it depends if money is guaranteed income or not. You show me where in life income is guaranteed. You want to say U.S. bonds. It's probably the closest thing we have to guaranteed money, and that's because the U.S. government will continue to tax us. Is it CDs? Is it, okay, guaranteed income truly nowadays comes from knowledge. It's not from an investment vehicle that you put your money in. It's not by annuities. Trust me, I've seen those guaranteed annuities. I used to sell them. Okay? Nothing is guaranteed in the markets other than your ability and your knowledge. Think about it. Who do you want to rely upon to make sure you get money? Not going to do it to the government, everything like that. You need to be able to invest in yourself and your knowledge, learn the skills to do a type of trading that you're comfortable with, go out, make an effort, learn the process, and go out and trade. Okay? So this, again, February 26th at 6 p.m. is when the workshop is going to actually be held. Of course, it's going to be recorded. You'll have complete access to it forever in case you can't be there live on the 26th. Okay? Let me just see here. Okay, the trade setups, the trading that I teach in the webinar is not necessarily indicator based. I trade primarily based on support and resistance levels, setups or reversal setups, and breakout type trades based on movement above and below support and resistance levels. Being able to trade with a trend intraday, and utilizing the correct, in my case, options, but I've also had traders that trade in this particular manner with futures. Okay? So it's a strategic view of the trading day and what to expect at particular points where types of behavior in the indices and in the individual stocks take place that you can take advantage of. It's almost like if I told you and you were hunting antelope, okay, you were on a safari and you were hunting antelope, and I say, sit in that tree right there, look at that patch of ground about 100 yards away, and at 5 o'clock in the afternoon, from 4 o'clock to 5 o'clock, look for your target. Okay? Do you think you stand a better chance of being successful as a hunter if I gave you that information? I can't make the antelope walk in front of you. I can't help you necessarily make a successful shot. But what I can do is put you at the right place, at the right time, with the right trade. Okay? If I can do that, the other 20% is up to you. I've taken care of my 80% of the trade. Okay? So that is in essence the strategy, the idea behind the Everyday Profits workshop. This workshop will roughly be almost 3 hours, if not more. It's a very detailed workshop. Again, I've been trading intraday in my stocks and options live trading room almost 2 years. That's roughly almost 500 trading days. I take anywhere from 3 to 5 trades every day. So I've traded roughly 1,500 to 2,500 different trades throughout the trading day. Okay? A lot fewer in the afternoon than the morning. The morning is my specialty period. Okay? So I have a lot of experience in that. All right? Here's one example right here. I showed you earlier. These are the price line calls, but the number that's important is this one. This is $12,590. Don't worry about the big number and say, ooh, that's a big number, 12,000 in a day. Okay, I traded 20 contracts, 20. I have some traders that trade 2. I have some traders that trade 1 or 5 or 10. Just depends on their account. But $12,500, 20 contracts is roughly $630 per contract per day. Okay? Compare that number to this number. You invest in yourself, you have a potential to trade. Now, this is me, okay? I've been doing this longer than most traders in my trading room. So let's just say you're successful half as much as I am. Your trading results are closer to 300, okay? That's about what you're going to invest in yourself with the program. This is one day. What you're going to do tomorrow and then the rest of the week, okay? A lot of my traders that become successful understand that trading success comes from repetition. You have successful trade opportunities and you repeat it day in, day out when the opportunities presents itself. It would be great to have an account with roughly $30,000. 25 is what I would recommend. So you can trade intraday. I do not hold overnight, Richard. Nope, that's the essence of this particular type of trading. I do it in a specific account. I don't hold anything overnight. I have swing trading account. I do a different kind of trading. But the essence of the Everyday Profits program is put money in your pocket every day, sleep well at night. Okay? Again, you can see that this kind of trading, another day, it happens to be the same, almost the same number, $12,230. This is $625 per contract per day. Say you're half as effective as me, 312. Very reasonable price that you're paying for. Okay? Again, this is 13,280, 20 contracts. This is 664. In the trading room, I average roughly anywhere from $400 to $800 a day. Okay, $400 to $800. In the past 2 days, the markets have been extremely choppy. I've been running close to 150 to 200. Okay, I'm not perfect, but the majority of the time we run anywhere from 400 to 800. Roughly 600 is our average. But again, the everyday profit setups, the trades, the time frames, the step-by-step way to trade intraday, it's a distillation of everything that I've learned over 2 years. And the reason why I developed this workshop is because my traders asked me to. They would come in, they'd see my results, and they'd come in every day for a month, and then months on end, and they said, Dave, how do you do that? I see how you're doing it. I've listened to you talk, but how do you do it? Can you create something for us that we can take and review and give us a framework so we can be successful trading every day? And that's what the essence of this program is. It's taken me about a month and a half to 2 months to generate the framework and put it into a step-by-step way of trading. And that's basically what we're talking about today. Okay? Again, the Everyday Profits program is in essence exactly the way that I trade, and I trade extremely consistently. That's my goal. I'm not here to hit a home run every single day. That's not my effort. Okay? Again, this is February 26th. Okay, it is at 6 p.m. Eastern. Okay, I wish I could make it a little bit later for you West Coast folks. The problem is I'll run way over for the East Coast folks. Absolutely. The question is this workshop going to be recorded and archived? Absolutely. The essence of this is it's your program. I actually recommend the first time you watch it, you just watch it and learn and listen. The second time you watch it, you listen to it again, you take notes. The third time you watch it again, you listen to it again and as well as review your notes to make sure you didn't miss anything. Okay? Yes, Eastern time, sorry. Okay, that 3-step learning process really helps formulate this in your mind. Now, you're not finished because you need to take the steps to implement it, but once you've done it at least 3 times and reviewed it, it gives you a very firm knowledge base for you to go forward and continue to trade. It would help to have a good options background, yes, but I will detail the option strategies that I use because a lot of my traders do use options, so I find that it's the most effective way to implement this. Now, I have somebody asking me, can I use debit spreads or can I use credit spreads? Yes, you can. Okay? You just have to be careful of the timing of it all. I like to use credit spreads, but my credit spreads are run on a weekly basis. It's a different strategy. But I have some traders that trade, credit spreads intraday, and they utilize the same time frame, the same techniques, and the same tendencies that the markets go through, and they're successful traders with that too. I do use Thinkorswim, John. When I'm implementing the everyday profit strategies, Tom, I am primarily using directional puts and calls. I buy the weeklies, like today, Wednesday, I'm trading the weekly options that expire on Friday. Don't I worry about time decay? No, because I'm not going to hold multiple days. I'm holding just today. I'm holding just for this hour. I'm just holding for this 30, 45 minutes. It just depends on the trade. But I'm not holding it overnight, so I'm not really worried about time decay. I'm more worried about, can I predict which way the stock is going to move in this limited time period? Okay, what is the setup that I should take? What is the support and resistance am I playing off of? What is the time period telling me? Is this a time for a reversal or a continuation? You take all those factors plus aspects of what is the index doing, what are the other indices doing, what are the higher and lower time frames telling me. You take all those together, you have a really good chance to be correct on the trade. I know nobody's ever asked me about, no one's asked me yet, how consistently, what is your win ratio? My win ratio, win-to-loss ratio is much, much higher than my losses, okay? Because primarily we have consistency on our side. We don't take trades that don't have multiple factors in our favor. I don't like winning half the time and losing half the time. To me, it doesn't help, and me as mentoring traders, I find if I can help them win very consistently, they're much better at trading, because it's much easier to develop when you're doing well and you're being successful, even if it's small, compared to losing half the time and then winning big half the time. Okay. The Everyday Profits program is leveraged. Okay. So if I'm using $1,000, if I'm using $1,000 option, like I'm buying a call for $1,000, it's a $10 option and it goes up to $12. Well, I just earned $200 on that 1,000. And that's typical. You get 150, 200, 300 sometimes. It depends. If you trade Priceline, it's going to be much bigger. Adolfo, again, this particular strategy, I prefer to just trade directionally. Sometimes I've found that, okay, the bottom line of the Everyday Profits program, a lot of option traders tend to overcomplicate trades. The primary benefit of utilizing options is the fact that they are leveraged. If you can look at the markets, predict with high probability which way the stock is going to move in the next 15, 30, 45 minutes, all you have to do is reach out and pick the vehicle that you're going in. If you think it's going to move up, okay, and you're going to go north in the stock market superhighway, it doesn't matter if you're on a motorcycle, a bus, a sports car, or a minivan. They're all going in the same direction. So you can buy a directional call, you can sell a bullish put credit spread, or you can buy a directional, you can do a call debit spread. Doesn't matter. They're all going in the same direction. Okay? I prefer the fastest way to get there. I'll get in the sports car that's the directional call, and I'll move up, take my profits, and move on to the next trade. Okay? That's how we make money. All right, so again, the Everyday Profits program, the workshop is February 26th, 6 p.m. I would highly advise you guys to take advantage of this special webinar offer. It's $297. It's valuecharts.com/profits. It is posted in the chat box, and let's just see here. Oh, okay. Sorry. Thanks, Dan. Thanks for the reminder. I do have some more time, so I want to make sure. I wasn't quite sure what time I ended, so I do have more time for questions. I'm really glad to have that. If you guys bear with me 1 second here. All right. Give me 1 split second. Maybe I can bring up some more. Okay, so I have some people with some good questions. Let me answer some more questions here. You'll see my trading screen. Excellent. Okay. So I figured we could talk about this a little bit more. Look at the S&P 500 index. And actually I'll look at the SPY. Okay, we're looking at the trading intraday. And I believe this is it. All right. Now here is the opening range box. Oops. Yeah, roughly this time period rough here. Now again, I'm sorry I don't have everything lined up perfectly, but this is the opening range box. Okay. If I extend this out here, and I extend, that's the high. That provides resistance. Here's the low. This area provides support. Excuse me, but does that not look like the chart that I just showed you today? Okay. I mean, the charts I was showing you earlier, the opening range box. What are we doing? We have a seesaw, kind of a little bit choppy kind of day. But we break the opening range here to the top. And what do? We find some resistance here. We fall back. We find some support right here. And we bounce. Where? Back to the middle of the range. Then we actually do continue higher, back to the top. And what do we do for the rest of the morning? We touch here, here. This is the mid-morning reversal right there. Okay? This could have been an early reversal here if you wanted to call it that. This is what I call the mid-morning reversal, almost textbook. Then we spend the majority of the rest of the morning and the lunch period higher in the top part of the opening range. But we don't really break higher above it most of the morning. Then eventually right here when everybody kind of starts to come back, we break to find support at the bottom of the opening range, and then we make a nice strong move in the afternoon. Here's the afternoon move. The retest, it's not really the best double bottom, but we do have a move higher. Now at this point, where are we again? We're back within the opening range. And the one thing that's very interesting about, thank you, Mark. You can see that we're back in the middle of the opening range. It's almost amazing how the markets are contained with that area. Now, I would say 80 to 90% of the time, we finish the day within the opening range. Okay? Let me see if I see any questions here. Well, Katerina, I don't understand. Your question is, by the time we finish analyzing it, the day is over. No, you actually take action really quickly. Once you have the opening range, I mean, I've taken trades within the opening range, but here, 3 minutes after the opening range closes, if you read this as a top, a single top, basically you're trading it to the downside. Here, you have an inverse head and shoulders pattern probably on a 1 minute chart. Here's the low, here's one low, here's the second low, here's the third low, and then we move higher. Trade this to the upside either in the SPY, you can trade that ETF, you can trade SPY options, you can trade an underlying stock that happens to be moving like this. Lots of times I watch 3, 4, 5 different underlying stocks, and the ones that look closely matching this, maybe it has a double bottom or something, I'll take the trade in the same direction, and what do? We shoot higher. Now here it's rough, it's hard to trade. Why? Because the market's not moving. But once we get a break of this support, say you miss this part, you see the weakness, you see the momentum profile, see how weak that is? You take this trade, a break below, it's almost like if you see this much downside momentum and you're sitting on the support level, guess what? You're thinking this is not going to hold. And right here at 1257, it breaks lower. Look for a weak stock that will move down and get flushed down with the market. You have a very nice move here. And then you have the rebound trade. Okay? And where do we rebound to? Back to the range of the opening box. again, the opening range is it is a little variable sometimes, but it's really closely related to the way it's moving here at the open. Yeah. And this could be anything. One of our traders says, hey, you know, I think that was caused by waiting for the outcome of Greece, some results in Greece, and talking about the EU. I agree. Yesterday, we had the same thing here. Yesterday, here's the opening range. Oops, hold on. My mouse doesn't want to comply. Here's the opening range. You see how we're nice and range bound? Why? We were actually waiting for the results of the JOLTS number. And then we had a drift lower, and then we had a subsequent run higher, break higher, and then we retested the high of the opening range a couple of times, and then we move higher into the end of the day. Okay? Now here's the new day. Question is, where do we line up? Sorry. Where do we line up, and where are we going to close? So where do you think? We're through the middle of the opening range. Which direction might we go? I say we're going to probably test the high of the opening range. We're going to watch the momentum profile, because if you start seeing that we run out of momentum right in this area, guess which direction the stock market is probably going to go in? It's probably going to drop. Okay? Do I do a pre-market analysis? Sometimes, Richard, but that doesn't matter as much to me. I try to stick within the way the market is moving. But I'm not going to deny the fact if we're up, you know, 2% in the spiders or down 2% in the NASDAQ, I'm going to take that into account. But on a day in which we basically open unchanged, and if you look at right now, that's where the SPY is, almost unchanged for the day. You see we spent most of the day right there? That's what you get. And I'll tell you, you have this, I'll tell you how many trades you could have had. Okay, here's one trade, here is two trades. If you miss this trade here, I don't blame you, but if you missed it, you could have caught this one, 3, and then either a bounce off this bottom or this double bottom right here, and then a move higher. You could still be in it, or you could have gotten out right here. So there's 1, 2, 3, 4 trades right there throughout the day. These are two major ones in the morning. And this is in a morning that really kind of was choppy. This really wasn't the pristine kind of back and forth seesaw kind of day. But the opportunity to trade is right there. Okay, let's look at the QQQs. Those are moving averages. Okay, the NASDAQ was stronger. I believe this is roughly the opening range. The NASDAQ was stronger. Again, here's that initial move higher, and what do we get? We get a pullback into the middle of the opening range. We test the bottom one more time on this bar, and then we break higher. Now what's interesting is how the NASDAQ kind of behaved around this high of the opening range today. Okay? So now once we break higher here at roughly 1045, we come back, we come into the general zone. Usually this is one key to trade a breakout to the upside. We get another pullback higher, and then a pullback back to support. And then another move higher, and then a little consolidation and back to support. Now this time, support can't hold. So what happens if the upper bars here can't seem to hold that? And now, like, how do you know that's going to fall back into the opening range bars? How do you know that? Do you see this momentum profile? What is the slope of this line? That's a negative slope. You can read MACD or you can use MQ momentum like we use, but this is negative. So the strength of this downside momentum shift is evident right here when we break lower. And then where do we go if we break the support at the high of, okay, we go to the low of the opening range. We make a little bottom here, you can catch this move higher. Where to? Back to the middle of the opening range. And then one little last retest here, just like SPY, and then Once we start to move higher, where are we going? We're going to go to the top of the opening range, and then back again, and then now we're back above the high of the opening range. Then we're going to look at that and say, okay, let's see which way we might go from here. Okay? You think we're going to continue higher? It's looking still fairly strong. The slope of this line's going higher. It actually now may retest the high of the day. You have basically a head and shoulders pattern right there. Yeah, you can trade OEX. Anything is possible. Okay, so there in and of itself, I mean, just happened to be today. That's what we've got. Okay, that is our opening range. Let's just see. Netflix, I can try an individual stock. Netflix is going to be a little tough because it was so strong today. But again, hey, it happens sometime. This is the opening range for Netflix. Let me just double check. Yep, that's the opening range. So if we put support and resistance levels in this area, it's going to be a little bit tougher because the opening range is so huge. Normally we trade in conjunction with the underlying stock index. But look at Netflix. Here's the opening range, extremely wide. It comes up, it makes a single top, and guess what it does? It starts to fall back. Now, Netflix, I was trading this morning, and you see the nice strong pennant, roughly 11.10 or so. We break lower. Where do we break towards? Break towards this the bottom of the opening range. Now, keep in mind, you're going to have some inherent levels in here because of the width of this opening range, but it falls. Do you see how we retest right here? Come back down, make a double bottom, come back, can't retest the middle of the opening range. Where do we fall to? To the bottom of the opening range. You have a bullish divergence here, one more retest here, then momentum the whole time is moving higher. So when we finally bounce off this, and again, this is 1, 2, 3, 4 tests, we're moving back up. And where are we most likely going to move back to? We're going to move back to the middle of the opening range. When the range is this tall, usually you'll put the middle of the opening range on there also because it really will give you another level within the opening range to trade back and forth. Yes, you can absolutely look at volume also. I don't like to overly complicate what I do, so volume can be a coincidental indicator. I do have some traders that like money flow. I believe that is the one indicator that they use, and other types of volume indicators works well too. Basically, all you're doing is I'm giving you the framework. I'm telling you that the underlying stocks and underlying indices tend to behave within certain parameters throughout the day. Okay, again, why are we having a lot of trouble right in this area? Not only is a lot of consolidation, but it's also lunchtime. Here, what time do we start to break out? Roughly 2 o'clock, and we start to run higher. Catherine, those are things I definitely cover in the trading room, but not in this workshop. I mean, not in this webinar today. I will definitely touch on it in the Everyday Profits workshop on the 26th. No, Richard. It should be reflected well enough here. I mean, there are additional factors you can come in. The one thing that, again, I found is most traders that are seeking to optimize their trading, to be successful on a consistent basis. The one difficulty they have when they trade is the fact they want to keep piling on more indicators, more things that they look at, more, quote, preparation in their trading. Okay? Now, I can't blame them with that because I don't know if it's a false belief that a complicated system that takes into account multiple factors is the most efficient way to make money. It's not. What matters is that you have the essential information and setups in mind that you set up and you trade. My setups are based on support and resistance, times, tendencies of the market, and distinct trading setups, as well as a good profit-taking strategy. You do all those things and you do them repetitively, everything is priced into this market. Okay, the market moved higher right here because of a particular reason. And whatever that reason is, I really don't care, because I can read it both in the price and I can also read it in the momentum. If I had a volume indicator, I'll be able to see that too. Okay, so that is what makes it simple. That's what you have to do in order to trade consistently. Because if you're trying to trade 20 stocks, watch 5 indices, 2 time periods apiece, plus 3 different indicators for signals, and you're trying to do it intraday, you're not going to be able to do it. Okay? We watch 3 indices, we watch 1 specific or 2 specific time periods, and we look for distinct setups at distinct times. Again, it's my hunting analogy. If I put you in the tree, I tell you where to look, I tell you what time to expect whatever you're hunting is going to come along. All you have to do is sit there, watch the clock, point in the right direction, look for what you're trying to get, and then when it's there, take action. I think it's going to set yourself apart. So keep that in mind. Again, the Everyday Profits workshop right there. It is going to be available to you. We'll hold it live on the 26th of February at 6 p.m. Eastern. Please don't let this opportunity go by, because for the amount that you would spend on your personal knowledge of this, you're going to get a way to make money every single day in the markets on a consistent basis. All you need to do is take action, follow the steps, follow the time frame. It's a step-by-step kind of workshop. I don't put a bunch of fluff in there. I tell you what works. I've shown you what works, and hopefully you take advantage of this opportunity. All right. Well, again, I wanted to tell Dan, thank you very much for this opportunity to speak with you guys. I look forward to hearing success stories from my traders. So please let us know if there's anything we can do for you. All the best in the markets, and look us up on ValueCharts.com, and we're more than happy to do what we can for you. Our job is to make good traders and profitable traders, and we look forward to working with you in the future. Thank you.
All right, Dave, thank you very much. That was an excellent presentation. If you can stick around for a minute, I had a couple of things I wanted to actually bring up.
Sure.
First of which was I just wanted to make a comment that being with Investor Success and when investing for over 6 years now, I've seen hundreds, literally hundreds of options trading courses from different presenters and speakers. I've seen a lot on over the last couple of years on the weeklies, and the one thing I've never seen before is someone who's basically day trading options. So I was very pleasantly surprised that your topic, when I saw the title of your topic, intraday trading, I made the assumption that it was going to be stocks or futures or something along those lines. But when I saw that it was calls and puts on options on a daily basis, that was very impressive. It's surprisingly, pleasantly surprising, and I think that it's definitely unique in the industry. I haven't seen anyone else, and I'm sure there are somewhere, but I haven't seen anyone else day trading options like that, and it seems like you have a very solid system for doing so. So
thanks a lot, Dan. I appreciate it. Yeah, I mean, we've been doing it a long time now in the trading room, and if anybody's got any questions on that, feel free to stop by ValueCharts. More than happy to extend a trial for you to come in and experience it. But thanks for that. Yeah, we're selective on the individual securities we trade options on. You have to have the liquidity. You also have to have the movement in the underlying stock. If the stock doesn't move, you really can't make money. But that's kind of how the strategy kind of developed. And you can see these particular stocks that we trade do move, and we tie that all in with the movement of the underlying index. So that's kind of how we kind of, that's our sweet spot in our trading.
Yeah, this is definitely a unique strategy, and I would highly recommend and encourage people to take advantage of your special offer. I did want to make, I had a comment earlier. You were pointing out about $600 a day at average profits. So I think it was like $12,000 a month, something like that. And I did want to make the comment to everybody. I think you had pointed out that, you know, at $600 a day, if people were only half as good as you, they, you know, compared to the webinar, the Everyday Profits workshop, you know, they'd get their investment back right away if they were only half as good as you. I want to point out actually that if people are only 1/10 as good as you, you know, for $600 a day, they'd be making $60 a day compared to a one-time investment in your workshop. I mean, this is not like a daily investment. It's a one-time investment in the workshop. If they're only 1/10 as good as you, they'd have their return on investment in a week. So, again, this is, I think, it is a great deal, and definitely something people should take a look at. So.
Thanks, Dan. And I didn't mean to sound like I was kind of tooting my horn. Like the way you said it, I'm like, wow, that sounds really cool, Dan. But what I want to mean is when I'm showing teaching this workshop, one thing we point out is when we see a setup and we put an order out there, we do our best to get filled. And, of course, because of some of the bid-ask spread and things with the options, sometimes you don't get filled. And that timing works out through experience. And so when we have newer traders, sometimes they don't get filled. Maybe they're not as fast at clicking the button. But in essence, that they might miss a trade that I take, but if they follow the framework, the trades, they'll see the trades there. And as they get better, their performance actually improves. So the more you do it, just like anything, it's repetitive, you get comfortable, you get experience, and if you follow the framework, it's absolutely doable. It's absolutely doable. So thanks, Dan.
I believe that. And again, I just wanted to point out, you know, the difference to everyone with comparing a daily income versus a one-time investment in your education. So after that 5 days, even if they're 1/10 as good as you, after 5 days, everything else is gravy. So the last thing I wanted to bring up was more along the lines of a question. You had made the comment earlier about you recommend an account size of $25,000 to $30,000. Now, you had also you pointed out that you trade 20 contracts at a time. Now, there's a lot of experienced traders in the room, and they have, you know, accounts in the 25,000 and well beyond that. And there's a lot of less experienced traders and a few absolute beginners in the room that are looking to get started. If you were trading only one contract to start off with, could you get away with, you know, a $5,000 to $10,000 account, or would you still recommend a $25,000 account?
Well, the only reason why there's the $25,000 recommended amount is not because you're like investing the majority of it. It's because we're trading intraday, and there's a requirement for the day trading requirement that you have to have at least $25,000 in the account in order to buy and sell within the same trading day.
That makes perfect sense.
That's why. Now, do I recommend someone trading one contract right at the beginning? Absolutely. I mentor a lot of traders, and they have, you know, $500,000 trading portfolios, and they want to get started right away. And I tell them, one contract. Why one contract? That's $1,000, and I'm not even risking the whole thing because I'm going to get in and out. I said, one contract until you know what you're doing, and once you get comfortable and experienced and at ease with your trading, then you can ease into it. The nice thing about options and the way we trade these setups, the setups that I give you in the Everyday Profits program is always kind of there, okay? So it's also scalable so that you can take advantage of this and increase your size as you are ready. So if you're looking at each trade, I made $100 on that one contract, that's excellent. Next time you're trading 5 contracts, you made $500. You just have to determine what you're comfortable with and then take it from there. There's certain stocks I could trade more than 15, 20 contracts. I don't have to, Okay, if you get to the point where you're trading consistently enough, you're bringing thousands of dollars, you make $1,000 a day, and you realize that you can do this consistently enough, your goal really not is, do you really need a $1 million portfolio? I mean, maybe if you're comfortable, if you're a retiree and you're just trying to bring in some really good income, if you're trying to replace your job, look at the numbers that I showed you earlier. $114 one per day, and that's a $30,000 income. You want a $300,000 income per year, you can do $1,000 a day easily with this, and you can step back and there you go. So everything is scalable. I just want to, what's nice about the program, it's the framework. It teaches you what to do. It's up to you how big you scale it up. That's the nice thing.
All right. Well, Dave, thank you again. Excellent presentation, and everybody, we typed in the link into the chat box, so if you want to check out Dave's Everyday Profits Workshop, go to valuecharts.com/profits, and that'll be February 26th at 6 p.m. Eastern Standard Time. So, all right. Thanks, Dave.
Thanks, Dan.